Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in today's free video I wanted to discuss some of the things that I take into consideration whenever I am considering taking a squeeze setup. For those of you that may not be familiar with it, the squeeze is one of the most important indicators that I use on my charts. I've learned this from John. It's also built into Thinkorswim, so if you use that platform, you can find it already there installed. All this indicator is trying to do is find points and times for us where compressions of implied volatility can't really last. So what it's saying is compressions build up the energy, and then the move happens when these dots transition from red to green. Okay, that's the general theory behind it. However, when I come in and take a look at the S&Ps, in this case the ETF for them through SPY, you can see that we do have a squeeze in play. However, I'm not really a big fan of buying this particular squeeze, and there's a couple of things that I'll show you for it. First of which is just inside Thinkorswim, and it's a helpful tip if you'll go to Style and Settings, and then here in this first dialog box you'll have the opportunity to show high and low bubbles. I like having that enabled because what that does is the second that I turn that on, notice how today's bar populates where it actually just shows that price back above it. What that is telling me is that for your selected period of data, this is the high for that period. Now, of course, in this case, going further back would be a high as well, but this is just a very quick way to look at a chart and say, okay, the spider's made a new 5-year high today. You can very quickly identify that. Now, why do I point it out? Because buying the new high is not the game. Playing for the push to the new highs is more where you want to try and get involved with that. Now, I did not do that here in the spiders. I have not been trying to buy them, but we'll look at this comparison in another chart, and it's backed by the idea that when you look at your previous swing high to swing low in relationship to the move that we've had, the extension off of that move is going to be 218.57, and we're about 5 cents shy of that target. It's not to say that this can't push higher, but it's just saying that you're giving up so much edge trying to buy this as you approach a target. Now, what is a place where we have a very similar signal, but I would feel much more comfortable buying this? And that's in Lulu. Now, the big difference in this chart, you'll notice that if you're just looking at the current price action, notice how that high-low bubble does not populate on these charts. And why is that? Because Lulu has not made a new 5-year high in relationship to this current price. So what it's telling us is that the S&Ps have already made that push, but notice how Lulu has a squeeze in play. We're above our broad moving averages, and this momentum has shifted. Everything about this shows us that we've got a nice solid setup in here, and I am looking for this to break into immediate new highs. Now, if you can get it to go, really get some strength, 82.50 is overhead, I'm going to have a little bit closer targets for my immediate move, and just like we ran that chart there of SPY, I would take the previous swing high against your swing low, and those should provide for some nice swing-based targets that are around $80.40. So if you go back and spend some time comparing the two of those, I think it will help you stay on the right side, or hopefully stay in the squeezes that will be a little bit easier to focus on. And one of the tools that I use to find these is the Simpler Trading Scanner. So there'll be a link to this page if you'd like to check it out after this video. I believe they have the intent of increasing prices on this, so if you'd like to check it out for $47 a month, I think it is definitely worth its weight in that at least, and I think it's a tool that you could add in and really find some good setups like we've done here. So I hope you found that helpful. If there's anything else I can do for you, please let me know. Otherwise, I will see you at the next free video.